All right, we started our YouTube live as well as TikTok. Going to be doing mainly just a bunch of charting here for today. Trying to understand risk sentiment. We did have the SPX bump up a little bit, but I do still think that we are now still within that resistance zone, which was a previous support. But first, we're going to go through some economic data. Let's get our recorder going, and let's just get this started right away. We will be going on YouTube live as well as TikTok, and you'll be able to see the monitor a lot more clear on YouTube compared to TikTok. Just letting you know if you are just hopping on initially on our TikTok. Hey traders, welcome to a global macro update. Hopefully you're having a good week so far. We got a little bit of economic data to go over, and then we're going to jump right into the video. First thing we're going to look at is the GDP numbers for the US came out. It was the same as the forecast at -5% in contraction for this quarter, and we can see back in the worst of it in 2009 during the financial crisis, it was at around a -6.3. I believe 6.4% contraction, and then we're now sitting at a -5, and we were just coming off of 4.8 kind of before in the Q4 of 2019. So overall, obviously, pretty big jump from where we were at previously, but the market still went up. Today we got a move up. We did talk about this initial zone, so let's zoom out and first discuss what we can currently see within the market. So we're going to take a picture of this current structure. So we are on the 1 hour chart. Actually, before talking about the 1 hour chart, let's actually go to the 4 hour chart, because we do see obviously a larger time frame structure within the S&P 500. So I'm just going to get the large, thick drawing tool, and then we can get started. So we know for a fact that when we were on our way up, we were holding the 61.8% fib level. So if we get a retracement from the high to the low, we retraced 61.8. And that is a key level within the Fibonacci retracement. And that was a key level of resistance right here, which then gave way to a pretty significant bullish move when it did inevitably break. When we came crashing back down after breaking this nice little ascending zone, when the bulls were finally through trying to push the price higher, we did get a sell-off back to our previous zone, which is now going to be our new level of support. So that's currently where we're going to right now, in my opinion, is we're still making lower lows and lower highs, and it does look like we are forming a descending wedge, which people will initially look at it and say that is an extremely bullish price action pattern. And overall, if you're counting initially, yes, the price action pattern as well as the overall trend, it is in a bullish trend until we break the key level of support right around here at around, let's say, 29.80. I'm not going to be extremely short biased until we break that zone. Yes, we did make a high and then a lower high, and then now we've definitely made some lower highs here. So the momentum on the short term is to the downside, but we know that there's a lot of demand here that could potentially hold the price. If it does break, obviously that's going to be a shift in trend. That's going to be a shift in confidence and conviction from the bears in the overall market, where if we go beyond this zone, I think we will have quite a bit of sell pressure, or at least a lack of confidence from the buyers that is going to hesitate the price from making any significant moves back towards the upside. So we'll see how it goes on the larger time frames, but when we do get into the smaller time frames, we do see today we had a pretty big bump up from our small consolidation. So we'll zoom in a little bit more clear here and then discuss what we see in the market. Gonna get a little bit of water, and then we'll continue on here. So what do we see within the S&P? Well, we initially had a horizontal zone kind of like this. Yes, we did see a wick here, but overall we were holding a series of failed higher highs. So we were holding a resistance horizontally and holding a support horizontally as well. So we were just consolidating. And then we had that nice move that was holding this ascending zone, and then we had a failure to go down to initially what we were thinking, a hold of either this support, because we've held it multiple times. We failed and held this previous support as a new resistance so far. We did get a little bit of a bump up, but now where I currently see the price is in a pretty key zone of confluence for the sellers, where this resistance, support, 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 support is now going to be acting as a resistance, as well as this zone right here. And when we zoom into now the wedge, we're now actually going to get into how the structure is looking and all that stuff. So we see one touch, two touch was the anchor point, and then 3, 4. I call this 1, and I call this 2. So still, it right now is a unvalid descending trend line. I need to see 3 touch points in order for it to be a valid zone, and I currently see the last one right here, and then it was a previous resistance turning into support, 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 support. So probably going to be some level of sell pressure at this area, which is going to probably drop the price beyond where it currently is, back to the lows here. That's my high probability situation, or the path of least resistance that I currently see within the overall market. Is we did have a move up, which was a little bit surprising because the GDP numbers, I guess they were as anticipated. The contraction was -5, just like the forecast. So it wasn't worse than what was anticipated, but obviously a contraction in GDP is not great. So in short, we see a descending wedge. That does not mean that it's guaranteed to potentially break to the upside. There is situations, let's just get a different color so we understand where it is. There are situations where you get a meltdown. So you might get a push to the downside, and then you use that previous support that was held multiple times as a new level of resistance, and you probably get some level of horizontal previous support, new level of resistance, and that would be a point to potentially look for some short exposure, in my personal view. And that's only if we get a meltdown, where it actually breaks the series of lower lows and makes a significantly lower low. It retests the previous lower low support as a new level of resistance. That, in my opinion, would be a pretty good setup for a potential short opportunity. Ideally, it would be looking like it's breaking the 2970 zone as well, and then that would be a meltdown. And that's the first option that I currently see within the structure. Now, if we're looking at a more bullish potential outcome, the descending wedge would be serving as a potential bullish continuation pattern. If we are looking on the 6 hour, the daily, obviously we had a major bull, I guess you could say bull rally, but it turns into an actual bullish trend once you start to see the continuation on the daily chart. And I'd say at this point, we are in a continuation move to the upside. We're not really seeing that massive sell-off just yet. And if we do see a break of this descending wedge to the upside, it might be a good time to be looking for risk on instruments, investments, trades that you are currently looking for. So in a perfect world, what we'd like to see in terms of a descending wedge is we have one major test, second major test, and I'd like to see a third major test of the resistance zone. We could get a little pullback. You could see a horizontal zone. You could also see a potential less low or a higher low. So you could pull back just a little bit and then start trending like this, and then you get your little ascending zone that you could put in right here. So that was a little bit long. So you could put in your little ascending zone right here, and then you'd be looking for the structure that we always look for in a breakout. You're looking for a change in market structure as well as a breakout within the overall price action pattern. So this would be something we're looking for. We're looking for the previous resistance to act as a new level of support. So then if that is the most recent low, we put a horizontal zone here. We notice that it was also a previous resistance indicated in the price action pattern to the left of the chart. And if it breaks, makes a higher high, you know that it broke the market structure, which was this key level of resistance right here. I know it's green, but this would be the previous level of market structure ceiling that you need to break. And once you break that zone and you clearly see a higher high on the 1 hour chart hold, then you're looking for confirmation with a retest. So let's just draw it in a chart format. So let's say you get a huge bullish candle like this, little wick like that, and this was, let's say, the overall, let's get it white, and this was the previous resistance, which is now acting as a new level of support, somewhere around there. What you're looking for ideally would be a retest that's going to validate this zone as a new level of support. You can get it in two ways. You can get the candle closure on the zone with just the wick going beyond it. That would be a type B. Or you can get a candle where the wick touches that zone and the body does not touch it. So this would be a B and this would be an A. Either one would work. And what we would be looking for is once the continuation starts to come back to the upside, then you'd be looking for either a break of this high, if you're looking for a break of the candle high on the retest candle. But let's say you're looking for a nice bullish engulfing candle like that, that would be a phenomenal opportunity for a risk on sentiment trade in my personal belief. So that's what we're going to be looking for a possible move to the upside. But as long as this is, if we're just going in red again, as long as this is looking a little bit more on the bearish side, I think this could be the possible outcome here if we are going to continue the downside momentum that we've seen, where we get a big sell-off, you get a recovery, and then you're going to get a potential another sell-off here. If we are going to see something like that, we see obviously the sell-offs are a lot more significant than the rallies, but we'll see how it goes. Let's just draw in a potential. So if we're going to go like that, so if that's like here, something like that. So you get a strong push to the downside, breaking major levels of support. And then what you'd be looking for is something probably maybe not as aggressive, but in terms of the pullback and the continuation, that's probably going to be something you're looking at right here. So you're looking for a melt down where you're breaking key levels of lower supports or lower lows, making a significant lower low, just like a melt up. We saw that same melt up in the SPX to the upside when we were recovering from the COVID crash. And this is the same thing except inverse or flipped, where you're making a descending wedge instead of an ascending wedge, and then you're melting down going with the direction of the wedge. So it's descending, so you're going back down, whether if you're going to go ascending, you're going to go up. That's a melt up or melt down. So that's going to be, in my opinion, the potential of a melt down. And then we already talked about that potential if it does move to the upside. But in my opinion, this descending wedge is still not broken in either direction, and it still hasn't really truly validated the descending trend line that is connecting the lower highs. So that's my outlook for the S&P. We'll see how it goes. If it does break this zone, I'm not going to call it a breakout. I'll have to reassess the situation, but as long as it's currently holding the structure that I see in the markets, I'm going to keep it, I'm going to view the market in the same way. And then the Russell 2000, we've already talked about this. There's not much that has changed. Also, before we get into another one, we'll actually look at the comments, because sometimes it's good to talk about a chart, look at the comments, and then a chart, look at the comments. So we'll look at the S&P 500, or we just looked at the S&P 500, so we'll look at the comments really quickly, and then we'll continue on with the video. So Mr. 915, what span of time are we looking at here? So this is the, well, previously it was the S&P, this is the Russell 2000, but the chart that we just went over is the S&P 500. This chart is actually the futures, so it's going to be filling the gaps that you normally see within a S&P index chart, but this is the S&P 500. What span of time is this? So we were looking at the 4-hour, and then this is now the 1-hour time frame. Mainly, I do like to have my entry time frame on the 1 hour. I like to create the structures that I trade off of on the 1 hour. So that's how I currently use time frames. But I'll go top down. I'll go from a larger time frame and then work down. So I'll go from like a weekly or daily, and then work my way down as the price action gets more granular. I can see what's going on and pick my points at that point. So is this 1 hour, day, week, or month? I'm trading futures right now low. Yeah, so Mr. 915, this is the Awanda futures chart. So this is not, the ticker is SPX 500 USD, if that gives you any indication. So yeah, that's the analysis for the S&P 500 right now. SUM Vedo says I'm trading futures right now. ESUO. Wondering if you're long or short. I kind of gave my thesis. I think it's definitely too early as of now. I'm looking for this nice structure. It's a descending wedge, either going to be melting down, and then we'll be looking for a break below 2970 to really confirm the shift to the downside, or we'll be playing this as a continuation move to the upside, looking for a break in the resistance and market structure before we long on this descending wedge. So I'll let the price action speak for itself. I do not want to project my bias onto the market. If this resistance instantly breaks, this resistance has not been validated enough for me to use it as a breakout. So I'd like to see it reject one more time, and then this price action resistance is in play for me to use as a potential breakout zone. Being just doing nothing right now, waiting. Yeah, I'm in a similar situation. Gold, I thought, was stabilizing really well. We'll talk about that a little bit later. But gold's something I'm really keeping an eye on. Got some nice wicks to the downside that held closing actually higher than the open. So it looks pretty favorable right now. The correlation between gold and traditional risk-on assets like the S&P, Dow Jones, and Russell 2000 is currently somewhat a little bit negative. So it's a positive thing. If we are expecting this to melt down, we would want to be long gold. And we'll see how it is. It just broke into an 8-year high. Around 1764 now, broke out of an ascending. We'll talk about it a little bit later. I'm just explaining. But yeah, dropped this morning, took profits on it on gold. Yeah, like I'm looking at it on the 1 hour chart. Let's actually look at it right now instead of going through all the equities. Instead, we'll just hop on gold. This will be a little bit dynamic. We'll go with the flow. We will go over all the different assets that we normally go over in our global macro update. But overall, we're going to be a little bit more fluid, a little bit more dynamic with this global macro update. So when we are looking at it on the 1 day chart or the daily, we do see that there's a very significant wick on May 18th, and the candle on June 22nd broke out of that consolidation with the daily closing above the zone. That was extremely great to see if you are bullish or long gold. And then we did get a nice ascending triangle, which in my opinion looked really great. We are hesitating to make an impulse push back up to the upside towards our $1,800 key level of supply that I currently see within the market. That is going to be the next key level of take profit. So when we go into the smaller time frames, we notice an asymmetrical triangle that made its impulse push to the upside, breaking the structural ceiling of that consolidation zone. And then when we jump right into the 1 hour, this was that ascending triangle that I thought looked like a great setup, and we still see the price hold its support. Initially, I was a little bit worried at the fact that the price was failing to hold the series of higher lows on the trend line, but as long as it's holding the previous major structure on the ascending triangle as a new level of support, I'm happy. We got a pretty big wick down here, definitely shook a lot of people out, but it's holding on the 1 hour chart. We really want to make sure that we're getting a candle closure before we really take into account any of the candles, because obviously, in my opinion, candle closures are extremely important. Where the price went obviously is key, but looking at the 1 hour, 4 hour, daily, weekly candle closures is vital. Those are going to give you important areas to look at. So in terms of gold, it's consolidating, but it looks somewhat bullish. The thing I'm looking at in terms of the metals is going to be silver right now. We had a really good couple trades back a month and a half-ish ago on silver. And what I currently see right now, before we actually jump into silver as an asset, we're going to quickly look at the gold and silver ratio. AXU, AXG, or just type gold/silver, and you'll get it on your TradingView chart. And we see that 108 drop right here, where it dropped way below 108, and it was an extremely aggressive push to the downside. And then we made a lower high, lower low, and we're failing to come to the recent high. So yes, in the short term, we are making a series of higher highs and higher lows, but in my personal view, this is just you can call it a bearish flag, an ascending channel, ascending wedge, if you maneuver the resistance a little bit, but overall, I see this as a continuation move to the downside, and if we do get a break of this ascending level of support, especially the 95 zone in terms of the ratio, that's going to be a pretty bearish move for the gold and silver chart, which is going to be overall a bullish move for the metals, but you're wanting to be more in silver than gold, because gold is going to be potentially appreciating, but silver is going to be appreciating at a much faster rate, just like we saw back in mid-May of 2020, where silver had some beautiful moves to the upside with some squeezes from triangles and wedges. So really, really solid move. We'll talk about silver right now. We're going to quickly look at some comments on TikTok, and then we'll continue on looking at silver. So we already talked about gold being a potential play as long as that's holding above the 1760 support zone, the demand zone. As long as it's above that zone, holding on the 1 hour chart, we're looking good. We're looking solid. It's stabilizing. We're not getting a series of higher highs and higher lows like we're liking, or like that we would like, but it's holding, it's stabilizing. There's demand picking up the price and holding it there, which is, in my opinion, a pretty good situation to be in. So that's a good thing for metals. And then once metals, usually starting with gold, picks up, then you get silver to come after. But then once it does start to turn and look more bullish overall in the metals sector, silver really ramps up and usually appreciates at a greater rate compared to gold when there is a metals bull market, which we are currently in. After gold broke that $14-ish $100 level of resistance, finally breaking out of that the base, that was when I was really looking at potential moves for silver as well. So let's look on, I think this is a 4 hour chart. We can already see huge triangle right there, and then another one was right here, this descending zone. But quickly going to look at the comments here. Dropped this morning, took profits on it. Gold, yeah, so we'll see how it goes. I'm definitely, gold's consolidating. I like it. It's holding our support. But if I am going to look for a potential next trade, I would say that silver has, in my opinion, a higher probability in terms of the current structure of the market. This is a nice symmetrical triangle where you are holding a horizontal zone of support and creating a descending series of lower highs. If this ascending support does break, you would be looking for possibly a short. I don't really like shorting metals because I'm more long-term bullish on them, but that would probably be the highest. The next highest probability is a break of support getting dropped back to around $17. So if it doesn't break to the upside, this symmetrical triangle would probably be failing to the next level of support at around 17. So that's the overall outlook for silver. I don't really have much else to add on it. It's a waiting game for silver right now. Gold has to hold 1760 for me to even be interested in silver for long. If it holds, starts slowly grinding up, sees a little bit more appreciation, sees more bids coming into the market, then I will definitely be looking at silver for a potential move and a continuation to the upside. So that's my view of the market. Sumo, love your chart breakdowns, man, highly valuable. Thank you very much. I really appreciate the comment and the engagement and the discussion. Much appreciated. So we talked about metals. We talked a little bit about the S&P. We stopped there and we actually went and jumped on the metals. We already talked about the S&P. Also, if you are watching on YouTube or TikTok, if you just wanted me to look at a certain ticker, asset, just throw it in the comments, and I'm definitely open to looking at whatever you're interested in. And quick look at the small caps, which is the Russell 2000. This is the futures RTY. We can see that it's holding a very nice ascending level of support, creating higher lows, and then we can currently see is a potential head and shoulders here on the Russell 2000, where the key level it can't break above is 1450. That is going to be the top of the right shoulder, and then the break zone where you get the armpits and the breakout in the neckline is going to be 1350. So if the RTY, which is the Russell 2000, breaks 1350, that's going to be a pretty risk off sentiment, at least for the small caps, and this is going to be in confluence with overall indexes falling, looking at Dow Jones, S&P, NASDAQ even. And that's going to be all in confluence. But overall, it does look like it is squeezing. And I think that if it does move to the downside, we could see some sellers try to push the price down, or at least buyers kind of hesitating to really jump back into these dip buys if it breaks 1360. So that's the current structure. We'll see how it goes. We got a nice little squeeze there. I'm currently not trading the Russell 2000, but it's a good way to analyze the overall risk sentiment and tolerance within the market. Quick look at the NASDAQ. The NASDAQ, for me, the key zone that I'd like to see break, if I'm looking for risk-off exposure, which is if you're bearish stocks, would be around 10K. So the NASDAQ is holding 10K extremely well. It's been holding it since mid-June, and it's almost this last week of June here. So it's been holding for a while, and it's exactly 99.62, 63, somewhere around there. If it breaks, that's going to be some hesitation, and we do see, let's just get our snip and discuss this a little bit more clear. So definitely there's a lot of hesitation. We see initially this could be a potential head and shoulders. If we get the left shoulder, this is the head. And if we get a right shoulder, and then this is the neckline right here, we see was initial previous resistance or support right there. So that could be a situation where it would be a reversal pattern, but you definitely want to be looking to follow the trend compared to looking at reversals if you are trying to just be a continuation trader. But even then, like if you're short bias and you want to short an index something, the NASDAQ is not the place to do it, in my personal belief. Looking at the things that have rebounded a lot less or a lot less aggressive, even looking at the global stage, the FTSE 100 has rebounded a lot less aggressive and overall has a weaker bounce from the buyers compared to the United States S&P, the DAX, even the Japanese stock market, the Nikkei 225. Let's actually look at that a little bit later. But yeah, that you're looking at relative strength and weakness, and the NASDAQ is by far the strongest index that we are looking at as of now. It hit an all-time high, whereas the S&P, Dow Jones, Russell 2000, none of the other ones have hit an all-time high. So if you're looking to long, NASDAQ's probably a good bet because a lot of the companies that are in the NASDAQ are going to be the stay-at-home companies that are reaping the rewards of the social distancing, staying at home, buying things online kind of businesses, the Amazons, Netflix, Googles, Facebooks, Twitters, the Nvidias, all these companies, the Zooms, those are the companies that are doing well, and they're comprising the Microsoft, Apple, those are the NASDAQ companies. So it makes sense. No questions yet. So I think the next thing we're going to be looking at is some volatility. Volatility is a good indication of if investors globally are fearful or are things are steady, there's oil in the gears, things are just chugging along nice and smooth. When there is increasing volatility overall, it's a risk off sentiment. You don't want to see the VIX exploding up, breaking out, making new highs if you are trying to long the S&P 500. You're wanting to see decreasing volatility if you want to look for sustainable, dependable long trades, in my personal belief. And if you're looking for shorts, if you're looking for breakdowns where it breaks key levels of support and really aggressively pushes down, you want to see the VIX breaking out. So what do we see right now? We do see a little bit of a pop here. We are kind of expanding where we're not able to break around 37, and we are forming these lower lows right here. So it's not great. Overall, expanding in the volatility, of volatility is not great. We see some stuff like this where it expands in volatility. It's like an opposite of an ascending triangle. It's just an expansion triangle, I guess you could say. I don't really trade this. I don't really have a pattern for this, but expanding volume or expanding volatility on the VIX is not great. You're looking for contractions to get a bump up. If you're expanding, you're probably going to be going down. So it's not looking fantastic unless we're able to potentially hold maybe a series of higher lows. Then it might be a little bit interesting, but right now we're just expanding to the downside, and it wouldn't be surprising if we just kind of slowly died off here, kind of something like this. And then we continue the slow descent, and then we'll go to our base of like 14, 13 bucks, which is where we're normally sitting for the VIX. Around 10 bucks is like the low. So if the S&P continues to go up, that's probably going to be the direction of the VIX and the overall trend. But if the S&P starts to fall and we get a lot of sellers coming into the market, and if the VIX goes around 37, that's going to make things a lot more interesting, because then the overall momentum is going to be shifting back up in volatility, which is going to be a potential risk off environment in which usually you're looking at things in terms of equities, you're looking to overall short. Ideally, you're looking to short relatively weak indexes or equities like single stocks. If you are looking at just trading equities or single companies, I guess if you're in crypto, definitely I think crypto and BTC is still a risk on asset. It's more correlated with the S&P, Dow Jones, Russell 2000, compared to things that are more risk off, like bonds or gold. BTC is still a risk on asset in my view, so that's going to be a main driver of the overall crypto market, is how well the equities market is doing. We don't see BTC being a safe haven asset just yet. There's no need for people to store their currency or store their wealth in gold and silver just yet. I know the people who are aware of money proliferation, those people are already looking at gold and silver or have already invested in gold mining shares, in actual gold and bullion and futures and whatever it is. They got their exposure. But it's the people who don't really understand that the government's printing a shit ton of money, basically, and inflation will hit inevitably. Let's quickly look at some CPI numbers globally. Let's check some economic stats here really quickly, and then we'll jump into some oil and some bonds. Also, if you want any other stuff looked at on the charts, we are live on YouTube as well. If you want to look at, or if you want me to look at a certain ticker symbol, a stock, a future, any real asset, don't hesitate to drop a comment. And then I'm just finding the CPI globally. There it is right here. All right, so CPI, what is it? If for people who don't know, CPI is Consumer Price Index, CPI. And what does this mean? CPI is the average cost for a good, for a basket. Sorry, I was thinking bag, but it's not a bag. A basket of goods and services. And you can get different CPI numbers, manufacturing CPI numbers, non-manufacturing, all that stuff. But basically, this is inflation. This is measuring inflation, because if this goes up, your average cost to get apples, bananas, rent, all everyday goods and services, this will increase. So CPI numbers globally on a monthly basis, if it's negative, we're getting deflation, which is your dollar is increasing in value compared to assets and goods and services. This usually is extremely negative for central banks. They hate deflation. They want a 2-3% inflation, which is basically 2-3% taxing you who is saving. If you're working a normal regular job and you're just putting your money in a savings account, they're taking value away from you, right? So I'm sure many people, if not everyone, is well aware, but that is some cold, hard truth. But you do see there's not much inflation at all, or increasing CPI numbers. Even places that have extremely high inflation and they need to have high interest rates. Looking at Turkey, look at their yearly inflation basis. It's 11%. Currently, they're only at 1.3% in terms of the inflation on a monthly basis. That's really low. Russia is normally 3% on a yearly basis. It's only 0.8%. Let's look at Mexico. Normally has a pretty high inflation rate or CPI numbers, but they're very, very neutral. They're not deflationary yet, but they're getting to it. Japan, no surprise there. And it says from SUM, just a matter of time in terms of the inflation discussion. I love talking about this because it's an extremely, how do you explain it? There's a lot of variables that go into which way it's going to go. It's either going to go heavy, heavy deflation, where the dollar is going to be the king. People are going to get out of stocks, out of crypto, out of real estate. And people are going to be rushing to things like bonds and the dollar and the yen and the Swiss franc and safe haven currencies. And that's if we get a very, very big shock of a risk-off sentiment. And we saw that kind of happen back in the sell-off when the quarantine initially started. What happened? That, in my opinion, is a really good indicator of what could potentially go down if we get another extreme fear event. Remember, the fear and greed index was at like 1 or like 0. What happened during that time? What happened when everyone was worried? The US dollar, DXY, went through the roof. It absolutely mooned. Things like the Japanese yen did really well as well because it is a safe haven currency. So when shit hits the fan, people aren't rushing to Bitcoin to hold their value. They're going to the US dollar. They're going to treasury bills and bonds and US treasuries. That is, in my opinion, where people are going to first. If there is another worry, if there's another lockdown, if there's some shit going down, who knows? It's 2020, a lot of stuff is happening, but that is why I think we could see deflation before inflation, in my personal belief. But I do think that inflation is inevitable. I think that it will happen with the amount of money that they have been printing. Let's look at another economic stat here. This is the increase in money supply as a percentage around the world. So let's just get rid of all this. Don't really know. Remove all highlights. There we go. So this is the change in the monetary base or the money supply in the last 12 months, in the last 3 months. Look who's in the top 5. USA sitting at 16% increase in the money supply in a quarter. How unsustainable is that, right? That I'm blown away by that. And yes, people are gonna argue that the greenback is a world reserve currency. There's always going to be demand because it is the medium of exchange on a global scale. So if you're a company in Brazil, Argentina, Japan, Russia, Saudi Arabia, if you're going to be transacting any commodity, gold, oil, coffee, whatever the case may be, you're going to be exchanging it for US dollars. So there's a lot of companies and countries who are indebted in US dollars because they need to transact on a global stage, and in order to do that they need US dollars, so they're going to borrow in US dollars. So there's a lot of demand in terms of the debt around the world that needs to be paid back in US dollars, and this could create more deflation because if there's more demand for the US dollar, people are going to be buying it, and that is obviously good for the dollar. So we'll see how it goes. Look up Brent Johnson if you're interested in what he calls the dollar milkshake theory, which is basically massive deflation, huge inflows of capital into the dollar, into bonds, into US assets. Basically, what he says is cutting the head off of other currencies, especially even minors, but exotics. We're talking about the South African rand, the Russian ruble, the Turkish lira, the Mexican peso. These are the currencies that are going to basically get demolished by the US dollar if there is significant deflation. And even things that are what you would normally think to be a more stable currency, like the pound, GBP, UK's currency. We've talked about it in the previous global macro update. It's pretty volatile. It's getting as volatile as the Mexican peso, which is an exotic currency. So as time goes on, I think you will start to see a shift. It's kind of like globalization of currency. Instead of all these different communities using different currencies, you're basically going to have a one world currency, which is going to be the United States dollar. And then the big question is if that fails, well, shit, then what are people going to use? And that's why a lot of people are looking at stable coins, BTC, other potential cryptocurrencies that may provide a medium of exchange on a global scale. But in my opinion, BTC is definitely way too early just yet. You have high transaction costs and it's not really scalable, but then you also have the issue if you are talking about stable coins that they're basically pegged to a fiat currency, which doesn't really make sense with the whole trying to understand that cryptocurrencies and blockchain are steering away from fiat. But so yeah, that's a whole problem that people will have to face later on. So we will see. Obviously, it's way later down the line, but you are correct. It is just a matter of time. I completely agree with your statement. United Kingdom, we can see change 7.9, Mexico 9.14, and then we see places like Venezuela, like 82%. Change in the last 12 months, like 1,600% change. Zimbabwe 244%. Pretty crazy stuff, right? So it can happen. It can happen. So let's look at some questions here. No real questions coming in. So let's go into U.S. bonds and a little bit of oil. And then we'll look at the DXY as well, because we already talked a little bit about currencies. First, we'll look at Western Texas Intermediate crude oil. So we did get a nice ascending wedge that tested the previous high, went a little bit above it, was a failure of a double top ascending wedge, which would have been a great pattern. We did get the failure back down. We're holding a nice minor level of support within the overall move down. I am still expecting this to continue to the downside. Overall, we could consolidate where we're just holding the $40 and the $34. We don't exactly know. But overall, it does look like we have failed, especially because this resistance is in line with where the initial gap was that initiated that huge sell-off. So obviously filling the gap is pretty key in an overall structure of gap fills. So we do have that nice fill there. And then in my opinion, we're trade bound and just holding a consolidation between around $40 and around $35. So we'll sit there. We just broke an ascending wedge, which is, or to the downside, which is a bearish price action pattern. So I wouldn't be surprised if we do go to that support zone, but I don't really have much else other than it's just going to be either trade bound if it does move to the downside, and if we go here, we'd be looking for that nice retest. And if oil does move to the downside, there's definitely going to be a lot of risk off moves in things like the CAD, like the Australian dollar, because they are pretty well highly correlated with oil. So keep a lookout for that. Quick look here. SUM sum says just a matter of time. S&P making moves right now. Well, let's look right now. That's my analysis of oil. There's not a whole lot to talk about. We're just bouncing. This is a bull rally, and in my opinion, a bearish momentum move. So we can even zoom in on a smaller time frame here. But overall, got a pretty big bump up from the support of 37, but overall it still looks like we are making a lower high and we could be making a lower low. So momentum is still to the downside on oil. Let's look at the SPX. It's right here. So we'll see how it goes. Yeah, it is breaking. I don't mind if I just move this a little bit higher up, but I would really like to see this hold. If it doesn't, I might just reassess the situation. But I'd like to initially see this hold. I'm not really ever looking beyond the 1 hour time frame. If I'm just about to enter and it's looking phenomenal, I'll drop it down to the 15 just to see the granular detail of my retest candle. If there's a lot of buy injections coming into the market, if there's wicks. You can get more detail in it, but in terms of just looking at an overall chart, just to get a gauge of overall structure of what I like to trade, triangles, wedges, I mainly just look at on the 1 hour chart. So I definitely don't have anything to act on it right now. If you're looking to trade it, that's great, but we'll see how it goes. If it completely breaks out, then I just say that I don't have a trade right now. I'm going to sit it out, just going to wait until I have a better opportunity. But if it bounces and continues down and fails to make that high, obviously then I have something I can do because that is within our plan. We got a pretty specific set of rules and criteria that need to be hit before we even consider thinking about a trade. Like I'm never going to look at it and just say, oh, it's looking pretty green. It's a nice little bullish engulfing candle there. There's some more volume. Okay, I might hop in. Like, there is such a strict rules-based system that needs to take place before I even look at a chart and get excited about a potential entry. But if the price is in that zone, in that wheelhouse where you're feeling confident and have a back-tested high probable situation that you've done 1,000 times, then yeah, definitely. It's a good overall setup if you think so. But we'll see. Still waiting here. Then take some trades to protect profits. Still waiting here. Yeah, it's not really doing a whole lot, but we will see. I think I'm more interested in gold if it starts gaining a little bit of momentum, and then if that's the case, silver might be my next take. But in terms of metals, but now let's already talked about the oil. Western Texas Intermediate. We're now going to go into the US dollar index. DXY is the ticker. And a lot of people kind of get confused what this is. How do you value the dollar? Because all it is comparing one thing to another. So what is DXY? DXY is mainly, not everything, but it looks a lot like the Euro USD inverse chart. And why is that? It's because DXY has 60% euro in the comparison. There's also GBP, there's krona, there is JPY, I believe, but there's also some other major currencies, but it's 60% euro USD inverted. So that's basically what you're looking at. If this goes down, you're looking for Euro USD to go up. So we got a nice squeeze there. I'm sure everyone knows about that large symmetrical triangle. We got a huge move to the downside, which is one big impulse move. We got our correction. This was an ascending wedge continuation pattern to the downside to carry the momentum. And the target was around 95, 96, the recent low. If you're just looking at the geometry of the size of the ascending wedge, placing at the breakout zone, and that's going to be your target. It didn't hit it. But now at this point, we're just consolidating, right? So we made a higher low. We got to note that, something to consider. The fact that we failed to make a low right there, that was the target. That was the ideal situation that the price would go to, and it failed to make that low. And I'm sure for anyone trading that pattern, they're probably taken out at that zone right there. They might have stuck it in, and then have the stop loss there, take profit there. Not a great risk reward, but if I was trading that short, I'd have been out by at this point. So we got to consider the fact that we made a higher low. Okay, well, we can put a potential trend line there, but the main thing we're looking at is now the 97.5 zone. We see initial support, and if we go back to the previous time frames, it was a previous resistance, turn support. It was a resistance here as well. So it's a pretty well respected zone in the overall chart. It was a zone of sensitivity on the way down and on the way up. So what I'm thinking for the DXY is we might consolidate here for a little while, because if we're going to hold a series of higher lows, we could just play around within this ascending triangle pattern. But if we break the 97.5 zone as a resistance, turning into a possible new level of support, that could be the turnaround for the US dollar to strengthen against other currencies. And this all has to kind of play together at once. You're not going to have the US dollar absolutely moon and stocks absolutely moon and gold absolutely moon. There's relationships and correlations with all assets, really, across the whole board. So you got to look at it as one giant moving machine, and you're not going to capture everything, especially just with the human mind. You don't have algorithms. You're just trying to think about risk tolerance on a global scale. But in terms of the overall structure, if the SPX goes down, and this sets up to be a nice ascending triangle, that could be a really, really good opportunity to potentially look for long USD trades in the FX market. Or you could look at stocks. There are tickers that represent this exact index, so the US dollar currency index. So you could be looking at longing those if you are just in the equities realm. There's also contracts for differences and all that. There's a lot of different instruments that you can use. But basically, that is the overall structure that I currently see, is the fact that we failed to make a low the same as the previous, and we made a higher low and rejected, and now coming back to the resistance, for me, signifies that there is definitely some buy pressure coming into the market for US dollars. So right now, we're going to take this off because this overall, this ascending wedge failed to make the low. So now I'm viewing this as a potential ascending triangle pattern. If it breaks to the downside, we got a pretty major level at 96. And if we fail 96, we're probably going to go to 94. We can see very, very well respected back on the 4-hour chart. And that's going to be my viewpoint of this overall situation. So we'll just look at some potential outcomes. So if this is the case, we're probably going to get, I shouldn't have got that one. Let's just get something else that looks a little bit better. So if we get just a move down, we're probably going to get something like this. We'll just get another sell-off that just slowly dies off. And then what you'd see within the SPX is the SPX is doing well. Crypto's probably doing well. If the US dollar weakens, overall people are taking money from cash and putting it into equities and gold and other things. And you're selling dollars, buying whatever else. So obviously that's inherently bearish for the US dollar. But if it goes to the upside, then people are leaving things like equities and storing their capital in cash. And that would be an opportunity where you're getting a huge bullish push to the upside. I don't know if it's going to be that aggressive. I actually have no idea, but it might be something like this. Pretty hard to assume, but we don't exactly know. That was actually probably not the best one. But I'm sure you know exactly how an ascending triangle breakout works. But we'll see how it goes. It's in a little bit of a squeeze right now. So next thing we're going to be looking at, that was the US dollar currency index. Let's just go to the 6-hour and leave it at that. Bonds have not done anything in terms of yields moving either up or down, so we're not really going to talk about them. We're really right at the base on the 5-year yield, and on the 10-year, we are making a little bit of a higher high and higher lows, but overall, we're just slowly grinding here, not really gaining much momentum. All right, so that was gold and silver, equities, oil, bonds, and dollars. So that's basically the video of the day. I'll open it up to some of the comments here. I'm not really going to go and touch on crypto. We already talked about crypto and what my thoughts are with the Performante Premium members. So not really going to be diving into that. Not a whole lot has happened, but we made some updates, just notifying people what we're thinking, what we're doing, and what we're planning, and the possible outcomes that we see occurring within the market. As a trader, as a discretional trader at least, for the most part, you're letting the price action decide. I'm not going to just wake up one day, have a bias that BTC is going to go down, and just trade like BTC is going to absolutely plummet. I got to have reasons, technically and fundamentally, ideally, but definitely technically, to give me an inkling to look for short opportunities, not just out of the blue. So, not going to be doing any shorting just yet. All right, still waiting. I already read that. All right, so if you have any questions, definitely drop them in the comments, but I will be closing the recording at this point in time. Thank you very much for watching. We really appreciate it. If you have any questions, comments, suggestions, definitely drop them in the comment section below, and we'll be sure to take a read and try to help out the videos, make them more entertaining, educational, or try to help them out to make them more valuable in some way, shape, or form. So thank you very much for watching. I really appreciate it. Until next time, have a good one.